Okay, good morning, everybody. Welcome back. Today's Friday, the last day of the week. I'm so excited to be live streaming today, and we're gonna see what kind of setups we are finding today. Um, I just want to check if this is good to go, like if it's a good stream. Says I should be streaming now, but I don't see myself yet, so I want to confirm that I am first. Seeing this very interesting reaction today. Let me see here. Because 9 o'clock, so we'll do something like this. Uh-huh. No, we're still not closing up their just yet. Everything's pointing to bearish directions right now. And then there's okay, I'm just a little bit behind here on the data. Trying to catch up a bit. Okay, so perfect. Looks like I am live streaming then. And this will be relevant until here. Oh, come on. Okay. So far, I mean, I'm trying to see bullish prices. I'll explain that to you in a moment. Just need to okay. Now the reason I'm looking for buys real quickly is because in a sense we are in this little mini buy program from this low to this high after seeing that it wanted to continue up from yesterday. Yesterday I did wanted to see price keep going down lower to meet Wednesday's PM lows, but um, I'm trying to figure out what could have been the cause of it, but look what it did. It just started retracing back up again, and it didn't want to go down lower. Perhaps this is a higher time frame time distortion, um, or the hand actually came in and did it and pulled the price out of that logic. So what I am looking at now is this buy program from this low to this high, and we do have a cracking correlation based on these lows. Now, what concerns me about these lows is that they're not part of the old previous lows. There aren't any lows to refer back to that I know of. No, there are no lows that I can refer back to at this time. So what concerns me is that this low, although it's a good SMT, I'm not sure if it'll be a good reaction point for us to take prices higher. See, we have a low, higher low, low, higher low on the Dow and US 500, but on the US 100 you have a low, lower low. So that is something that's piquing my attention here. And I'm going back to see if there have been any references. Let's go back and see. Maybe I missed something here. But do we have any lows that we can refer to yesterday? Okay, we have the New York lunch. Then we have London PMs that was attacked here later on, like around 6. So the only lows that I'm interested in right now are these two lows here. Okay, so these were already referred back to. Okay, with this low in particular, no way has been referred back to by someone. It's been referred by Dow Jones, but it hasn't been referred back to this one. All right, so because we have SMT lows here created, we have a low, higher low, but a low. Actually, look at lower low on you and Dow, but not a low, higher low. Yeah, I can consider that as a being attached because at least one of the sisters attacked it. That's sell side. So we have this mini buy program, and we're referring to these lows. I mean, this could act as a protected low here. So we wouldn't want to see price dip down here probably. I say probably because these are some tough conditions. We're also seeing TGIF occur. TGIF, we zoom out for a bit, is this. If we delete this and head into our TGIF, you'll see that we have already met projections up to 70% of it retracement, even 80. And now this wick down lower, seeing a projection here. So a couple of consolidations. Add the fact that we don't really have much news today either, so not that much going. And there's a huge pressure on yesterday's 10 a.m. candle right here, this wick. I don't want to see this pierce through. It can pierce through and act as turtle soup to go up even higher, but I don't want to see it pierce through at this time simply because there's an important what I have here, an important swing low. Okay. Yeah, an important swing low that's attached there. I wouldn't want to see it refer back to. So we've also made a swing high up here, and now we're looking for that another swing low to get us broken out of, so that we can continue going up higher. So if we use the futures market again, I need to show myself. Okay, where are you? Let's get rid of TGIF because that's also distracting. Okay, so if we look back 40, we'll see here we have a swing high form. Where are you? We have a swing low here. Okay, then we have a swing high broken out of. Now we're looking for that swing low. Oh, it's kind of broken here. Hang on, guys. I think I'm a little lost in my markings. So, does this sound like today? I wanted to. Does this look like a day I want to trade today? I would have preferred swing lows here taken, but where are you? So we do have SMT. And look at what's going on here. Second leg reaction. Maybe low, lower low, and then low, higher low. And low, lower low again on the Dow. So I don't know. We could see some short-term manipulation going up higher, only to then use that to go lower. How far should the manipulation be? Up to equilibrium of the current daily range. So if we do something like this, notice that it referred back up to equilibrium, and now we're seeing if that will be the catalyst to make price turn down lower. It's about to be 9. Oh, it's already 9:32. Okay, so we have to update our markings. What are we seeing here? Oh, where's my music? I'm telling you, this week has been kind of tough. Since Wednesday, it's been a kind of tough market conditions to trade. Okay, we have a bullish breaker set up here. And that's a block, right? Yes, that's a block. But we're not treating that as a discount PDR, right? Look at that big disrespect. And then we also have this. So, if we're not going to get bullish, right, we could see a reaction of turtle soup rally up here to get down lower. How lower? To London close. So I'm going to set a trade here, trade idea, until 10 o'clock. Nice. So many buttons. Okay, and then lastly, we have this going on too. We have the, what is times at 9? Okay. So we have, look at this mess. Hmm. Uh, yeah, I mean, it's a reversal idea trade here. What do I mean by reversal? The open flout for the 15U is from this low to this high, but the way it constructed this range, it's in the form of a type 2 dealing range. So type 2 dealing ranges tend to be dealing ranges that can cause a reversal. You see that after we opened up at 9:30, price wicked down to the external range liquidity of the 15U open flout range. And what are we seeing? I'm thinking of a purge and revert kind of pattern where we're using the external range liquidity based off the 15U to use it as a reversal to head up to higher prices. The idea is that it's going to go up to higher prices to tackle this buy side liquidity in the form of a turtle soup to continue prices going down lower, right? That's the idea now. So if I can draw out what it is that I'm seeing, I always lose this thing. I believe we're gonna tackle this buy side liquidity to head things down lower, unfortunately. But we also have this 30U bullish PD array that should be acting as support once 9:30 began. But after 9:30, you'll see that it's been acting as a premium array almost. An inverse bearish, an inverse breaker block, if you will. Okay, and this actually makes sense because this low would have been used for the reversal target. It targeted the reversal, and now it's going to go up higher. We trace back up higher to the now inverse breaker block, and now we'll see if that will be the catalyst of the cost that will send prices down lower. As much as I didn't want it to, we could be heading down to London close, sell side liquidity from Thursday. The reason I like turtle soup above the 60U is because it's the higher time frame range. Um, there was nothing else stacked next to it. So just like I described on the previous day, if I'm gonna use turtle soup on a range like this, it needs to be by itself. And currently at this time, the 60U is by itself, so I would use that as turtle soup. Tough read. So this adds to the idea that this leg was kind of unreliable because we're referring back to old lows that we were catching up down here inside of this mini buy side program. Um, Notice that we also created a type 2 dealing range from this high to this low, so we're anticipating a reversal soon. Okay, and that makes sense because we're in this higher time frame compared to this range, a higher time frame buy program. So we're looking for any lows here on this side, from this leg, from this A leg to B leg, to refer back to for a cracking correlation. We did see the New York lunch yesterday get treated as an SMT, so it was referred back to already. So I wouldn't want to see this get broken to or get treated to. So that's where I'm still having some struggles because this has to do with market symmetry, market intermarket analysis, right? You're taking two, in this case three instruments and comparing them to one another and seeing which one has the divergence. And right now, one of them tapped it, but the one that we're analyzing, the one we want to execute on, hasn't. So I need to perform more lab experiments in terms about what's the protocol or what can we expect to happen when the market that we're analyzing hasn't had that low met, but the other ones have, especially in the context of a buy delivery program. In my studies, I've seen something similar like this happen where we had this higher time frame buy side delivery program from this low to this high. We didn't get a cracking correlation here. So the lows that we're creating on this phantom leg, they were being disrespected, and all in all, it used it so that it can make price go up higher, right? And that makes sense because this whole leg was still in a buy program. It didn't want to retrace down to get more sell stops or, get more sell stops. And now we're seeing a similar thing happen when there's no cracking correlation. Price can still continue to go up higher if it wants to, but as you can see, it's having a time to do so. And I think it's because we've already acquired these lows. So what's next under it? These lows. And if that happens, well, this can also be a good entry to continue to take prices up, going up higher. But although I don't want to see it, it's also still a possibility. And I mean, look at this. We've also met TGIF projections. I just don't know. It's a messy hard read today. This is a really hard read today in the markets. But that doesn't stop our PDRAs. Look at this. Let's get rid of this guy real quick. Move to the side. Where's our first presented fair value? Right here. In the form of a SIBI, right? This could actually be seen as okay. Okay, so this was a type 2 dealing range, right? And up higher. And now we're reverting back to its A to B leg. Sorry, A to B leg. I like this SIBI. It reminds me of Model 2022. But I don't want to just go in there and trade it as such. Let's see here. We can get rid of this idea now. I wouldn't trust this move up higher. Yeah, this sell side was engineered for the purpose to acquire more sell stops, sell side liquidity. Hmm. Okay, now we have a clear indication of a dealing range from this high to this low. Okay, we still have this inverse bullish PD array breaker block at the highest point of this dealing range. Now, what makes this so interesting is the fact that this dealing range is high, is embedded, or is attached to the higher time frame mitigation. So this would be a nice area to take an OTE on. I mean, that's based on my previous studies. Let's see here. See how something like that would pan out. That used to be something that I used to do. Like if dealing range is attached to a higher time frame, you know, balanced price range, and we're already looking for our bias to head down lower, I would do an OTE range on it. So I'm just going to demonstrate this, see if that will give us what we're looking for. And of course, this trade will be relevant until 10 o'clock. Regardless if this inverse PD array was there or not. What is the external range liquidity saying to us too, right? I mean, we have this low to high. So this is the external range liquidity. And then we also have this 30U, right? What is this 30U saying to us too? Look at that. So this was already referred back to on the other market, on the Dow. This low was already referred back to instead of the lower low. Who was the one that was not referred yet? So this guy, the US 500, referred to this low. Hang on, this is good news. Okay, closed above 25%, revert back down. Hang on. Yes, that makes a lot more sense now. Yep. Remember, this leg from this high to this low is a type 2 dealing range for, so we're looking for it to expand higher. This low was referred when? Who hasn't and who hasn't referred it to yet? We have a low, lower low, low, lower low as well. But we have a low, higher low on US 500. So the moment we touch this at 939, we've created this leg, right? That's a type 2 dealing range already. See it weight close above 25% right here, the 943 candle. Set our entry to 25%, okay? And then see if that will be the cause to make prices go up higher. Nice. Let's set up 200. Take our profit up here. So this range, this entry is based out of the external range liquidity. Seeing that we're gonna go up higher here soon. If you missed the turtle soup here, that's okay. You could have entered on the 25%, and if you missed that, we're still using now the external range liquidity from this high to this low based on our 15U open float. So when price dips back down to it can use this as a continuation pattern where we break off of its external range high, use that external range high here as support. So you see that it wicked down here again, right, to this gap, and now we're anticipating it to see higher prices. How high? Up to the high of the external range liquidity here. So you'll see that we've attacked pre-market highs too. That's a profit objective that could have been taken. Okay. Now we're looking, will it be able to reach, we could get rid of this PM buy side Monday crap. We just have the London, right? London buy side and 12 a.m. buy side. And we've also crossed above equilibrium, so now that we bought equilibrium too, the equilibrium itself is fair value. It's a good fair price for you to buy into if you anticipate it going up long here. Wow, so you only had this one candle, 944, to really set up an entry here, going long. What are these highs formed? Thursday at 23.18. That seems about right. Now here's the thing. In this phantom leg, we're also looking for now old highs to be referred back to so that we can create a minor sell side delivery program that will take price to deeper discounts if it's still bullish to go down here. So that's why we have to now be a little bit wary and cautious about SMTs. So we'll see here that it broke this high and it broke this high either too. So everything's still correlated. So I really do anticipate seeing now London buy side liquidity be taken as well. It's fine. If there was a divergence, then we can anticipate this being our minor sell side. We anchor our A point here. This whole leg is a phantom leg, and it makes itself manifest as soon as we make a cracking correlation. But so far, everything seems good to go. Also, I just noticed that the inverse breaker turned into support right here too. See that? These two candles. That's good. This is what we want to see. Up to get price to go up higher. Okay. Now earlier in the stream, I said that I want to see the 60 mitigation block lower to be treated as OTE to head down lower. But because we had this cracking correlation on the lows on the first leg, that totally changes the bias of this trade range. So now we'll see if this, let's see here, what's the open flout for this? Okay, you'll see that the open flout was the pre-market highs. Okay, notice that once we broke above the external range liquidity, was this used as support as well? Take price up higher. It is a little bit above equilibrium, so you have to be a little bit careful. I'm gonna trade this and see if this is a good area to buy. But notice that the old pre-market highs are being used for here. Looking to see if the external range liquidity of this will not sell. This is me just being a noob here. We're also approaching 10 o'clock too, so you have to be kind of careful setting your expectations up now. Well, if you're entering on this trade, it should be break down to break even very, very soon. Hey, what the heck? I was tapped there, no? You saw that, right? I had that entry here set up. Oh, because I haven't set it yet. There you go. Set it. Now you're in. Okay, so you see, I'm still learning how to. I'm still learning how to understand the trading platform for TradingView. And again, setting to the break even if price allows me to do so in the next 2 seconds. Okay, and now we're looking to see if it'll continue its trend upwards. What is happening here? I modified the stop loss low. Now we have a new external dealing range to refer back from. We have this low to high, lower low, lower high. So now we have this external range right here. Something that it's interesting was this what you may call it, this high here, right? It's external. Now we're looking for buy side liquidity on the London highs to see if that will take prices up higher. So seeing how price retraced, pulled up higher, the moment it did that, I would take a little partial off. But we're anticipating for this buy side liquidity pull, so I'm going for that full pull, you know? but we'll see what happens. Okay, so we got stopped out there. Notice that low hit right into equilibrium. Low is 23,240.1, and then the low here is 23,240.3. So by like 0.2 ticks, but I'll still take that as accurate. I'm just CFD, so little inaccuracies can occur, but I still will count that. So I'm looking at this price action and I'm seeing this breaker here. Okay? Wondering if price will retrace back to here, trade that as support to continue up higher. You know, as I'm watching this, I'm curious how I would be struggling right now to continue my entry for it to go keep going long, especially in this like what you would call it, time distortion consolidation that's going on right now. Like, would that make you feel uncomfortable that if we had entered in this 25% level, or would I still? I think I'll still feel confident because we haven't seen any SMT here in these highs yet. So I'm looking for price to continue up going higher. Okay, and then we have this too, the 2030. Yep, we have like three dealing ranges stacked up together, right? This low to this high, very very crucial. And seeing if price would revert back to this breaker, bullish breaker here. I don't want it to trade back down to this low. Who was it? Was it you? Let's see here. Okay, now we're going for that London buy side liquidity. I'm really aiming for the new higher highs to be made. But we've now reached our second stage. Here we go. Okay, London buy side liquidity met. Now will we reach 12 a.m.? And check and see. Actually, we should check and see if we have any SMT here. So, uh-oh. Houston, we may have a problem. Look at this. Low, high, lower high, high, lower high, high, higher high. Now, let's look at this a little more. We have this buy program from this low to this high, right? So we want to see price refer back to discount so that we can continue making forward. There has been no SMT here, right? No SMT, everything's correlated. So we anticipate the buy program to occur, to continue. Has it made any new? So from this high to this low, I will consider it a phantom leg. Phantom leg just means that there's nothing settled yet. It's just a minor retracement, and we're looking to see how price will refer back to old lows. The old lows that we're referring back to, nothing was really popping off except the London lunch sell side liquidity. Now the London lunch sell side liquidity was tapped. So because we have this buy program, we anchor our A to B leg down here, and then we use the 25% of it to continue going higher. Now that this, I guess, retracement, now that it's solidified, now we got to refer back to the old highs to see if we can make a cracking correlation to create a minor sell side delivery program and see if that will make us have a high to react off to get down lower, to make price go into a much more deeper discount. Okay, and this is happening at like really higher time frame daily ranges too. Say we have a low. I mean, we have a high, higher high, high, higher high, high, lower high. Oh, interesting. So if that's the case, if we have a high, lower high right here, let's see. High, higher high, high, higher high, but a high, lower high. Okay. This could anticipate a small crack in correlation. So this whole thing was a selling program. The moment we closed below 25%, seek that 25% sell, and then we dipped into this liquidity pool from this buy program or time frame. So now the lows were met. Okay, cracking correlation. Now we have a minor buy side program. This buy side program took us up to here, and now we're looking to see if price will react in a manner that will take us down lower. That's interesting. Because we saw that SMT, I'm looking for that to be the catalyst to get prices down to deeper discount, at least to the breaker or to the low of this 15U mitigation range, especially because it's detached from this 30 Upedia rate. So looking to see if anything retrace back down here for turtle soup to continue this long. But it's also being held here as well, so that's interesting. So we'll see what happens in the next couple of minutes. All right, so we have 10:30. What do we have? What's the open range here? Okay, so retrace the bid, and then yeah, type 2 dealing range, going up to these highs, high to low. Let's see here then. We have a low to high. excuse me. We have a low. Yeah, so this whole thing is the block here. And it's not the 145. It's the fifth. Oh my goodness. Look at that reaction on that. It's interesting, no? Now we got to look at you. We have a low high, higher low. Okay. Okay, so that sell stop was also canceled to have price lower. There's certainly a couple of roadblocks here. Roadblocks. That'll definitely make price a challenge to make higher prices, especially once we had that higher high made on the London highs. So, but we're also on this type 2 dealing range reversal, this high to this low. So, that definitely presents itself a challenge to go up higher. Went back down to medium threshold, just a little bit below it, expand. We got the 50U breaker that should be acting as support now. We've just traded above external range liquidity. So see if that will be used as a reversal to go up higher. Notice that once we traded above this, I guess, a bearish mitigation block, we're looking to see it act as support now because it's an inverse bearish mitigation block. So you notice that when we created this candle, the sell candle, it opened and sold lower, just wicked it there, and it closed right above it. That's a good sign of support. But now we're seeing the next candle will continue the support of that narrative. It also happened this range from this low to this high. And we're looking also for this objective to behave as a turtle soup lower to go up higher if it's meant to keep going higher. Then there's also this entire dealing range that has been making up higher highs. So when we opened up at 10 o'clock, what ended up happening? We made new highs. Okay, did it retrace down to 75%? Yeah, it did. 75%. And boom, it's still going up higher. Now we made a new higher high. Okay, we're now back to this bullish, bearish, and that was shadowed as inverse bearish mitigation block. Let's take a look at the MNQ chart and see just what in the world is happening today. Is it prime conditions for high resistance liquidity? Let's get rid of you and then do not this one, this one. We'll move this one up a little here. Close and open. It's roughly about 41. So yeah, this could be considered high resistance. Okay. We also have this order here from this low to this high, anticipating to act as turtle soup so that we can continue going up higher. Again, if we go back up here to the electronic trading hours, remove this, go back to here, you'll see that this high to low until 11:30 is a type 2 bearish dealing range. So we're looking for this to behave in a manner of such where price can reverse back up to before 11:30. So before 11:30, I want to see this external range liquidity high be traded through. Okay. Because we had this implied bearish breaker whose low was not meant down lower. Ideally, we would have wanted this low met here with speed, but something stopped it down here. Right? Then we had these London lows that were taken out. And now we're anticipating for price to keep going up higher. But look at all this choppiness, man. Ow. Now, you see how this is stacked up together nicely? From this low to this high, this low to this higher high, and this low to this higher high. And I like to see this as OT right here. So instead of trading it as turtle soup, OTE higher. Just open 1045, so let's see what will give us. Let's see what will it give us here. Wait, what? Look at this whole mess. We still got this profit objective to be met before 11:30. We've also created new lows. We got AM lows and London close lows. So we got a couple of those now. I'm looking to see this OTE entry from low to high. Would be a valid entry to take prices up higher. We shall see. It will even get triggered. These are one of the hardest days because ego steps in. See, my problem is when I see price action do something like this, I get super egotistical. Like, oh yeah, you want to bring in your hard price action? Watch me get in there and still make money, despite this whole quote unquote mess or randomness. And that's kind of like how I am. I see a challenge in the market, I want to go in there and tackle it. This is a challenging price action to trade in, and I want to go in there and get into every high and low to prove that it's not random. And it's challenging because okay, you can fall flat on your face and not make money and still lose. That's because I'm not the one calling the shots. I'm not in control. Especially now on live stream. Social media makes it even worse. I mean, I don't. Thank goodness I don't have a huge following, but people will come back in here and say, "Oh, you see, your concepts don't work. The concepts don't work, and nor does your theory on balanced price action." So, mentally speaking, this is one of the hardest conditions to trade in right now. Now, especially risking real life money. No, chill. And this was a clear image for me. After the fact, of course. This was when things started to get challenging, especially because we're above equilibrium now. Okay, what's next? All right, so it's a little bit past my curfew. I'm still anticipating these highs to be met before 11:30. That's kind of like the goal for this, you know, goal to be met. Looking for that 11:30 to be met. It's external range highs. Um, Look at this mess that we created: consolidation or time distortion. The smart money is engineering shorts and long interest. Do we have any short interest right here? Yes, we do. Do we have any high interest? We still do. We still have that 12 a.m. buy side liquidity. So we'll see what unfolds. I still believe that we got to get up there before 11:30. If it doesn't, well, then there's that. I think the opposite happening. But for right at this time, I'm still favoring that side. This last entry idea that I thought of was that if we're still going to continue up going higher, we want to have that slingshot effect still. We have a type 2 reversal dealing range here again in the form of this high, lower low. So this range from this high to this low is going to be an anticipated reversal. So after 11 o'clock till 11:15, see it break above 25%, which it did. Okay, we retrace back down to it, spend a little bit of time in there, expand higher, retrace on it again, but we're still inside that level, and we're looking to see if that will take price up going higher, right? So we're still going to be inside this bullish bias. We got to find something in here inside of our balance price range theory to get into something that supports the idea that we're going to go up higher. And that's the playbook that we currently have at this time. Like, this is the formations that we have at this time. So I'm going to take that long and see if that will take us up higher to external range liquidity. Look how many trades I took based on ideas that I've been theorizing. That's why I like to take them with a paper trading account. Okay, so you'll see that I'm down tremendous. So I mean, in a way, it's good because that means I have lots to fix. But at the same time, ego came in the way. And like I was telling you all, trading in a market like this sparks up that energy in me that I want to go in there and trade even more because I see that there's a lot of opportunity, and there is. But at the same time, there's also a lot of fake out runs and consolidations, and sometimes I feel like I know what I'm doing, but I mean, the market just goes in there and slaps you in the face, right? Humbles you. So, all in all, pretty good analysis. Trying to get up to those external highs. This kind of threw me off a little though. This reaction above these old highs. We did get SMT on the first leg of you know, NQ and ES, but we were looking for that to see if the price will create a short-term sell side program to go lower, and it didn't. Instead, stayed inside this consolidation range. So, anyways, we'll see what happens. Thank you so much for watching, and I hope you have a good one.